Welcome. Today we're diving into a fascinating topic. Why is Bitcoin often called digital gold? Over the past decade, Bitcoin has sparked endless debates, with many investors drawing comparisons between this digital currency and the age-old precious metal gold. But what's behind this analogy? In this video, we'll explore the reasons why Bitcoin is seen as a modern counterpart to gold, and why some people believe it could be a reliable store of value for the future. Let's start by understanding what makes gold so special in the world of finance. Gold has been treasured for thousands of years. It's rare, durable, and universally recognized as valuable. Throughout history, people have used gold as money, jewelry, and a way to store wealth. Even today, central banks and investors hold gold as a hedge against inflation and economic uncertainty. Its physical properties and limited supply make it a symbol of stability and trust. Now, let's see how Bitcoin tries to mirror some of these qualities in the digital age. Bitcoin, created in 2009, is a digital currency that operates without a central authority. Unlike traditional money, it exists only online and is powered by blockchain technology. What makes Bitcoin unique is its limited supply. Only 21 million coins will ever exist. This scarcity is similar to gold, and it's one of the main reasons people compare the two. But there's more to the story. Let's look at how scarcity plays a crucial role in both assets. Scarcity is a key reason why both gold and Bitcoin are considered valuable. Gold is rare in nature, and mining it is costly and time-consuming. Similarly, Bitcoin's supply is capped, and new coins are created through a process called mining, which also requires significant resources. This built-in scarcity helps protect both assets from inflation and makes them attractive as stores of value. Next, let's talk about how each is used as a hedge against economic instability. Investors often turn to gold during times of crisis, such as wars or financial downturns. Gold's value tends to remain stable or even rise when traditional currencies lose value. Bitcoin, too, is increasingly seen as a hedge against inflation and economic instability. Its decentralized nature means it isn't controlled by any government, making it appealing when trust in traditional systems is low. But how do people actually store and transfer these assets? Let's compare their portability. Gold is heavy and difficult to transport in large amounts. Moving it across borders can be complicated and expensive. Bitcoin, on the other hand, is entirely digital. You can send any amount of Bitcoin anywhere in the world almost instantly with just a smartphone or computer. This ease of transfer is a major advantage and one reason why Bitcoin is called digital gold. Next, let's look at how both assets are stored and secure. Storing gold usually means keeping it in a secure vault or safe, which can be costly and requires trust in a third party. Bitcoin, meanwhile, is stored in digital wallets protected by cryptographic keys. While this offers more independence, it also comes with risks. If you lose your keys, your Bitcoin is gone forever. Both assets require careful handling to keep them safe, but Bitcoin's digital nature introduces new challenges and opportunities. Now, let's discuss divisibility. Gold can be divided into smaller bars or coins, but there are practical limits. Bitcoin, however, is highly divisible. Each Bitcoin can be split into 100 million smaller units called satoshis, allowing for microtransactions and flexible payments. This makes Bitcoin more adaptable for everyday use, especially in the digital economy. Next, let's consider transparency and how each asset's supply is tracked. Gold's total supply is estimated but not perfectly known. New discoveries can change the amount available. Bitcoin's supply, on the other hand, is completely transparent. Anyone can verify how many coins exist and how they move on the blockchain. This transparency builds trust among users and investors, making Bitcoin unique among assets. Now, let's talk about accessibility and who can own these assets. Owning gold often requires significant resources, such as buying physical bars or coins and arranging secure storage. Bitcoin, however, can be purchased in tiny fractions, making it accessible to almost anyone with an internet connection. This democratization of ownership is a key reason why Bitcoin is gaining popularity worldwide. Next, let's look at the risks and volatility associated with both assets. While gold prices can fluctuate, they tend to be relatively stable over time. Bitcoin, in contrast, is known for its extreme price swings. This volatility can mean big gains but also significant losses. Both assets carry risks. Gold can be stolen or lost, and Bitcoin can be hacked or misplaced. Understanding these risks is crucial for anyone considering investing in either asset. Now, let's explore how each is regulated. Gold markets are regulated by governments and financial institutions, with strict rules on buying, selling, and transporting the metal. Bitcoin operates in a much less regulated environment, though this is changing as governments develop new laws for digital assets. The lack of regulation can be both a benefit and a risk, offering freedom but also uncertainty. Next, let's discuss the role of technology in Bitcoin's rise. Bitcoin wouldn't exist without modern technology. Its blockchain system ensures secure, transparent transactions and prevents double spending. This technological foundation is what sets Bitcoin apart from traditional assets like gold. As technology evolves, Bitcoin's capabilities and uses may expand even further. Now, let's look at how both assets are perceived by different generations of investors. Older generations often trust gold because of its long history and tangible nature. Younger investors raised in the digital age are more open to Bitcoin and other cryptocurrencies. For many, Bitcoin represents innovation and the future of money. This generational divide is shaping the way people think about wealth and investment. Next, let's consider the environmental impact of both assets. Gold mining can have significant environmental consequences, including land destruction and pollution. Bitcoin mining, while digital, also consumes large amounts of electricity, raising concerns about its carbon footprint. Both industries are working to become more sustainable, but environmental impact remains a hot topic for investors and policymakers. Now, let's see how both assets perform during financial crises. During financial crises, gold often shines as a safe haven. Investors flock to it when markets are unstable. Bitcoin is still new, but it has shown resilience during some recent economic shocks. Some see it as a digital alternative to gold in turbulent times, though its short history means there's still much to learn. Next, let's talk about the future potential of both assets. Gold's role as a store of value is unlikely to disappear anytime soon. However, Bitcoin's potential is still unfolding. As more people adopt digital currencies and blockchain technology, Bitcoin could become even more integrated into the global financial system. Its future depends on regulation, technology, and public trust. Now, let's summarize the main similarities and differences between Bitcoin and gold. Both Bitcoin and gold are scarce, can be used as a store of value, and are seen as hedges against inflation. They're not tied to any single country or government, making them attractive in uncertain times. Their value comes from trust, scarcity, and the belief that others will accept them in the future. However, their differences are just as important. Let's look at those next. Gold is physical, tangible, and has a long history. Bitcoin is digital, intangible, and relatively new. Gold's value is stable, while Bitcoin's can swing wildly. Gold requires physical storage, while Bitcoin is kept in digital wallets. These differences shape how each asset is used and perceived. Now let's explore why some investors prefer one over the other. Some investors prefer gold for its stability and track record, while others are drawn to Bitcoin's innovation and potential for high returns. The choice often depends on risk tolerance, investment goals, and personal beliefs about the future of money. Both assets have a place in modern portfolios, and many experts suggest diversifying between them. Finally, let's wrap up with a summary of why Bitcoin is called digital gold. Summary: Bitcoin is called digital gold because it shares many qualities with gold: scarcity, independence from governments, and use as a store of value. However, its digital nature brings new advantages and challenges. Whether you see Bitcoin as the future of money or just a speculative asset, understanding these similarities and differences can help you make informed decisions. Thanks for joining us on this exploration of digital gold.